Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, we've been without the sonars for about a month. Chris has been filling in, but Group 1 is now back to full strength, and I should be back here every day doing the report from here on out. In the past few weeks, we've continued to see this move down in the VIX. VIX cash is now south of 18. The January future is about 19.20 right now. So the overall structure of the cash to the front month futures to the second month has stayed about the same. It's just moved down a few vol points. So we still have February future, which is now just about a month from expiration, trading $5 over where the VIX cash is right now. There's a couple of things in play here as to why the VIX cash is so low right now. We settle next week on Tuesday. The first day of trading next week will be January settlement. So we're only about 2 trading days away from January expiration. So right now, the real indicator of where the VIX should be is a much better indicator in the January future. We have a 3-day weekend coming up with Martin Luther King Day. That tends to weigh down the VIX calculation. And the other factor in play is that right now the VIX is looking at February and extrapolating March out of that equation. March volatility is a lot higher than February in the S&P 500, so that understates how that moves the VIX cash lower, really overstating the impact of how low that cash number is. So we're looking at about 19 on the January future, about 22 on the February future, as people continue to expect a pop out of the VIX that just hasn't come over the last week. Today in option trading, we've seen more interest in downside strikes that previously haven't been in play. The April 15s have traded over 1,000 times, marking the first time we've really seen interest that low on the curve. They've traded just a nickel. They're offered out at a dime right now, but it's clear that people believe that the VIX could keep moving lower. Over the last couple of weeks, we had more and more interest in the binary 20 put in January. People coming in to buy that put, believing that the cash could stay as low as it has. As the cash has even drifted lower and the VIX future have drifted down through where the cash was a few weeks ago, that put's gone in the money. And if we settle under 20 on next Tuesday, that put will be worth $1. People buying it anywhere between 15 cents and 30 cents. So that's what we've had here, just a continued move down in volatility. People are really starting to wonder, will first quarter earnings results finally stir up volatility? Will we see a move back into the 20s? Or after those results begin to come out, will we finally see the futures fall down lower and align themselves with where the cash has been? This is Jamie Tyrrell with Group 1 Option Monster.